Good afternoon, everybody, and welcome to our COVID cancellation conference 2, Successful Investing, and this one's titled The Stock Pickers. Today, tomorrow, and Friday, November 11th, 12th, and 13th, we'll have educators from throughout the country talking to you about a lot of very interesting things. But today, Mark and I are going to talk a little bit about the stock pickers. Let's get some of the legal stuff out of the way real quickly. Next slide, please, Mark.
Well, I had to stick in the picture of us with the knight.
Okay. We are the same guys that are part of the roundtable that comes to you from mid-Michigan on the last Tuesday of the month. This month, however, our November roundtable will be on December 1st because we didn't want to interfere too much with Thanksgiving. So if you like what we're doing today, if you are entertained or enlightened, join us for one of our roundtable presentations. You can go to the roundtable by going to the Mid-Michigan page on the Better Investing website, or you can drop my wife an email and ask to be added to our guest list, and then we'll remind you on a regular basis about the roundtable and about anything else that Mid-Michigan is doing for free for the members of our community throughout the country. We are going to be talking about real stocks in real time. Everything we reference is for illustrative purposes only. We are not endorsing that you buy or sell or hold anything. We want you to make your decisions. And we hope that those are wise decisions, but don't involve us in the final list of what you want to put money down on or what you want to cash in. We'll try to tell you if we own any of the stocks that we're talking about, but whether we remember to do that or not, we want you to know that these are real stocks and we're trying to keep it as current as we possibly can. We are going to post this particular session and all of the sessions in this conference on our YouTube channel, and we'll talk to you later on in the presentation about how you can get to our YouTube channel. If you'd like copies of the slides from this particular presentation, you can drop an email to markr@manifestinvesting.com. Manifest Investing is one of the sponsors of this event. It's co-sponsored along with the Better Investing Mid-Michigan chapter, and Mark will be glad to provide actual slides of the presentation that you can look at your leisure. Let's go to the next slide. We're going to celebrate success. We're going to talk about the stock pickers and give you a little bit of a background on what they are in just a moment. We're going to talk about jump-starting your portfolio with small companies. That'll be our class first thing tomorrow at 1 o'clock in the afternoon. And at 2 o'clock in the afternoon, Mark and I are going to discuss the return on value. That's the ROV in the word prove. And we're going to ask you to listen as we try to prove it to you about how you can use that number to help you analyze and validate your stock selection guides. The fourth class, this will be on Friday, will be Stock Study Resources. Our friend Cy Lynch from Atlanta is going to talk about resources outside of the SSG that you can use for confirmation and validation of some of the numbers that you choose to put on your SSG. It's an extremely interesting presentation, and we urge you to be there. That one will be at 2 o'clock in the afternoon on Friday. And at 3 o'clock, we're going to end with the traditional Let's Talk Stock panel. We have 7 of the best stock pickers in our community, and they're going to give you a couple of ideas each about things that they feel are ready for your action. We do understand that these picks that we make are important. So we follow those picks, and it'll be interesting to see how well our picks from this conference in May have done up to this point. We'll share that with you on Friday. But right now, let's celebrate success with the stock pickers. You know that our grand experiment, the experiment of creating investment clubs, is based on 4 basic principles. We ask folks to invest regularly, and that's pretty simple when you're in a club. A little bit more difficult if you're investing on your own. Takes a little bit more discipline to put a set amount of money into the market. That regularly doesn't have to be every week or every month. It can be whatever regular pattern you might use to add money to what you already have. We ask people to stay invested, but that doesn't mean you have to put every single dollar to work every single moment in your portfolio. In fact, George Nicholson, the grandfather of the better investing movement, made it quite clear that there were some times when you would have more cash than other times, and there were some times when you could take a look at non-traditional investments in order to stay invested. It's one of our basic principles, however, that we do believe that you stay in the market. You don't pop in and out and in and out. We want you to discover and own leadership growth companies. And we want those companies to have a fair amount of history and to have sales and earnings that are growing in a relatively stable fashion. If they're growing like that, then we can graph them on some real special graph paper, and the graph lines will come out pretty straight. They'll be moving in an upward direction, and the sales line and the earnings per share line will be parallel to each other. Hence our Mid-Michigan chant, up, straight, and parallel. And of course, we're going to ask you to diversify. We're a little bit firm on the idea that not only do you need companies from different sectors and different industries, but you also need companies of different sizes. You need small companies and medium-sized companies and large companies. And to us, that's what prudently diversify actually means. Our grand experiment is reaching its 80th year, and it's still going strong, and we're still making money following these simple principles.
All right. So, Ken, you said you're a little bit firm on diversification by growth or size. Just want to make the point that I think we're a little bit more than a little bit. All of the above investing, you'll hear us talk about that. Go ahead.
We've been doing this Stock Pickers Breakfast. This is our 17th year, folks. We've been meeting together in someplace central in our chapter, and we've been pulling together in recent years 100 to 125 people to celebrate the stock pickers. And the stock pickers are what we call our clubs that enter the Stock Pickers Conference. We've been lucky enough over those 16 past years to have our friend Mark Robertson with us for every single one of our Stock Pickers conferences. And I'll tell you that the people have got to a place where it just wouldn't be a Stock Pickers Breakfast without Mark there to give us an hour or an hour and a half of something both entertaining and enlightening. We've come to expect that Mark will be there, and of course we appreciate all that he does for our chapter and all that he does for our community. One of the things we've been doing for the last 8 or 9 years is recognizing our anniversary clubs. And since this is a Mid-Michigan program, I'm going to take just a moment to recognize our anniversary clubs for this year. And I'm going to draw your attention especially to our 2 60-year clubs. The 660 Club in Midland, this is their 60th year They celebrated that anniversary earlier this year, and they're still actively picking stocks, and they're still participating in our contests and our events. They've made the transition from first generation to second generation, and that club is still going strong. Our other 60-year club is the Hub Investment Club up in Cass City, Michigan. That's in the thumb, for those of you that aren't familiar with Michigan's geography. It's in the middle of the thumb, out in the middle of bean and sugar beet country. The Cass City Gentlemen, and it is an all-gentleman club, have been going strong for 60 years, and just recently they have decided that this will be their last year in existence. They still have 10 members, but they are going to fold their club and call it a day after 60 years of real hard investing work. We're also very pleased to have clubs from outside of the original Mid-Michigan chapter. We've recently expanded our geographic footprint to include the Lansing Central part of Michigan and the Grand Rapids, Kalamazoo, Benton Harbor western part of Michigan. We had added the northern part of the Lower Peninsula about 7 or 8 years ago. So now all of Michigan, except for the metropolitan area of Detroit, is part of our chapter. And we're glad that the Mighty Oak Investment Club of Howell at 25 years is with us. The rest of the names on the list are clubs that we've visited before, we've talked to before, and we're so pleased that they're still together and still working to help their members make money. Next slide, please, Mark. Here's the quick rules of our Stockpickers Contest. It begins every November 1st and uses the opening stock prices from that day. We do not include dividends as we tally up what the clubs are doing. That's because the guy that keeps the records just doesn't have the data feed to make that happen. But our clubs understand what the rules are, and the dividends will not be included, and that works for us. We do allow the entries to be traded 3 times during the year at specific windows. We give them trading windows that last for 24 hours, and they can make a trade or more than a trade if they wish during those times. The contest ends on Halloween at the end of trading, and we use closing prices to divvy up who's won and who's lost. The entries are simple: 5 to 15 stocks. Allocate $100,000 between those 5 to 15 stocks, and not a single choice can be worth more than $50,000. So you can't plunk all your money into 1 or 2 stocks. We ask that you have a minimum of 5 and a maximum of 15. Next slide, please, Mark. Here's the worst performing stocks from last year. And again, if you want copies of our slides, mark R at manifestinvesting.com, and you'll be able to get these lists. Now, on first glance, it appears this is a kind of a useless list, but with all of the experience that we have behind us, we know as stock pickers that especially the stocks near the bottom of this list many times end up being some of the best performers in the next year. Remember, this isn't long-term investing. This is 1 year investing, and that runs counter to a lot of what we believe as better investors. So we do find that there's always pretty good ideas near the bottom of this worst performing list. And you might take a look. In fact, in the last week since the contest ended, Some of these companies have disappeared from this worst performing list entirely. I draw your attention to the regional bank, Western Alliance, that had a wonderful earnings report, which moved it way off this list and has turned it into something of a winner in the last week or so of the stock market trading. Some of the other companies have had big moves up in that same time period. We do have some stocks on this list that have not done real well. And we believe that for whatever reason, there is a rule of five. And that rule of five says that no matter how hard you try to analyze a stock, occasionally you're going to have stocks that underperform significantly, and trying to come up with a reason for that underperformance will be very difficult. I refer specifically to Cantel Medical Corporation, which Mark and I have been boosting on our small company list for 3 or 4 years, and yet it continues to underperform the rest of the market, even though our analysis says it shouldn't be doing that. Let's go on to the best performing stocks, Mark.
Yeah,
and the best performing stocks, pardon? Mark prefers this slide, okay.
Yeah, I prefer this side of the rule of five.
Yeah, the best performing stocks are some of those stocks that in the rule of five, you always have one that outperforms anything you could possibly think of. I doubt any of us would do a stock selection guide and settle for a par value of 100% plus, and yet every one of these stocks has performed at 100%, and that's a 1-year return for these stocks. So obviously, if you hit a home run in some of these stocks, and especially if you captured some of the huge profit that would be there if you hit the home run, then you're sitting real pretty. You don't have to sell everything that you put into Tesla if you put it in a year ago, but capturing some of that 513% and using it to invest in something with maybe a little bit more potential going forward certainly makes a lot of sense. Look down the list. These are not all up, straight, and parallel stocks. But what's always amazing to me is that there are always really good reasons why I would put one or more of these stocks into a contest entry. I'm not so sure that you'll fill a better investing portfolio with these stocks, but having some of these as part of your portfolio just kind of validates the point that Mr. Nicholson continually made, that it's okay to have 15 to 20% of your portfolio in what he euphemistically called non-traditional investments, investments that aren't always up, straight, and parallel, that don't always have profits attached to them at the time you're buying them, that maybe don't have as much history as you're looking at, or that maybe are a roller coaster ride over the last 8 or 10 years. Take a look at some of these stocks occasionally, and if your club or you as an individual have some experience, it might be time to occasionally do a little bit of shopping on this list as well. Next slide, Mark.
I would just like to say that Hugh McManus and Kim Butcher approved this statement.
Here's the final standings for our clubs, and you'll notice that some of the entries are in italics and some of them are in plain normal print. The entries in italics are not clubs. They're not eligible for our prizes that come with the contest, but we do keep track of them because bragging rights are just as important at the breakfast as anything else. I want you to notice that the winner this year was the Cool Kids. and they have a kind of an interesting story for me to tell you in a couple of seconds. The Cool Kids are made up of Herb Lemkohl's grandkids, and his grandkids decided to challenge Grandpa and see how they could do versus Grandpa. Well, the Cool Kids came out #1, and unfortunately for Herb, his Northern Traders and his Cherry Capital clubs are down the list a little bit. So the grandkids score 1 to Grandpa's 0, at least for this year's contest. Now, with that being said, Herb has managed to beat the Cool Kids a number of times as well. Bernie's Beauties. Bernie is one of our investors left from one of our 65-year clubs that existed until 2 years ago, the Midland J-Vesters. And we said to Bernie, we know your club has folded, but Bernie, will you give us an entry each year as well? And Bernie dutifully sends us in an entry. And, you know, it's just amazing how he stays at the top of the list year after year after year. Mark is celebrating the fact that he's above the benchmark for the first time in a couple of years.
Try to be kind. This is
I'm being as kind as I can. I'm just looking at the facts, Mark. Okay.
Okay.
But Mark and myself I'll also have portfolios in here. When you say that you're in 19th or 20th place in a 24-horse race and you've only performed at 20% plus, then you know that the clubs are really, really performing when they send these particular entries in. Let's look at the next slide, if you would, Mark. It's a fact, folks, that the VFINX, which we use as a benchmark, appreciated just over 6.5% from November 1st through October 31st. And that benchmark included all the dividends from the S&P 500s. What's interesting about this contest this year is for the first time in 16 years, every one of our entries beat the benchmark, and that's beating that benchmark with no dividends being applied to any of the entries. The average entry appreciated by 41% and beat the benchmark by over 32%, again with no dividends being added to the entries. And 18 of our 24 entries appreciated more than 15%. That means they hit the number that Mr. Nicholson suggested would be a great number for an investment club to hit. They hit that number and then surpassed it with no trouble at all. Our winner of the contest is the Street Smarts. And the Street Smarts have been, we need to go back one slide because I have my script a little bit screwed up here, Mark.
Not a problem.
The Street Smarts are a group of women from Saginaw, and I will tell you that in the last 10 years, they've been in our contest every single year from the beginning, but in the last 10 years, in 7 of those years, the Street Smarts have made the top 5. So this is a club of very, very astute stock pickers, and they won the $100 grand prize this year, and everybody should be sitting there applauding them. One of our newer model clubs, B.I. Baker, took second prize for clubs this year. They'll walk away with a $50 prize. And last night, B.I. Baker was ecstatic when I told them that they had actually won money in the Stockpickers Contest. That's the first time for this model club to hit the top 5, and they would like to keep that standing moving as we go forward with our club. Now let's move on 2 more slides if we could, Mark. Here's a very interesting portfolio in our contest. It's called Your Choice. And we have found that in the last 16 years, in 14 of those years, your choice has handily beaten the benchmark. In one of the 2 remaining years, your choice matched the benchmark. And in that last year, that one time out of 16 years, your choice actually lagged the benchmark. That means that if you kind of take a look at your choice at the beginning of each year, you're probably looking at a portfolio that has a reasonably good chance of doing much better than the S&P. Now here's the 2020 choices. I've just circled the number of 60 plus percentage point gainers, and that's a 1 year appreciation without dividends. Try picking 14 stocks, folks, when 6 of them are going to give us better than a 60% return. It's not an easy thing to do, and that's what your choice did for us last year. Next slide, Mark.
Yeah, and Ken, I was just going to make sure that everybody understands that, I may have missed it if you said it, but these are the consensus favorites from the entire participating group. So that's what your choice represents.
Yeah, thanks for driving that home, Mark. Your choice are the most picked stocks from the rest of the entries. Here's the 2021 entry. No circles or anything yet. I captured this maybe a day or 2 ago, so the total gains will be different. And of course, since we're only 11 days into the contest, those gains will move around pretty big numbers move a lot of times until we get a couple months into the contest. But chances are that if you were to put money into this set of 15 stocks, you'd walk away with a portfolio at the end of the year, next Halloween, that would beat the benchmark. Now, past performance is no indicator of future performance, but 14 out of 16 beating the benchmark, 1 out of 16 matching the benchmark, and only once actually falling beneath the benchmark. You can read the names as well as I can, and folks, there's not a whole lot of really fancy names that our community doesn't already know and discuss in their meetings. Take a look at that list as you read down the list. You know a lot of these stocks right up front, and this is what our members are telling us will be a good portfolio 12 months from now. Next slide, Mark. Here's our Cool Kids portfolio. And again, if you can pick 8 stocks and have 5 of them perform at 60% or better, then you are going to put together a portfolio, especially when you hit a grand slam home run like that 500% point one. You're going to put together a winning portfolio. This is what the Cool Kids chose. Here's their picks, and here's their actual results. This is quite a portfolio. Next slide, Mark. And here's our Street Smarts, our club winners. And when you can put together a portfolio of, I think there's 10 stocks in this one, 5, 6, 7, 8, 9, 10, right? And you can pick 3 stocks that perform at 150% or better, then of course you have a good shot at putting together a winning portfolio for the contest. Now, again, I want to caution you, this is a short-term contest. I would never expect to see the portfolio for the Street Smarts, their actual portfolio, contain this much speculation and this much non-traditional investing. But this is for fun. This is a contest that has a 1-year limit to it, and they've learned to play this game very well, and at the same time help the rest of us when it comes to speculating just a touch. Here's the visual analysis, next slide, Mark, for one of those stocks, Square, and you can start to see the things that these ladies are looking for in order to make a nice speculation. They're looking for a sales history, and they're looking for a sales history that's consistent, and they love to find stocks that have just recently moved into positive earnings territory. This is the current visual analysis for Square. Think back a year to what this might have looked like. They would have only been seeing that consistent sales history, and I think that might have been an indicator that this would be a great stock to take a flyer on. Next slide, Mark. Here's the second of those real kind of speculative plays. If you listened to some of our friends in other parts of the country, then this name came onto your radar when it was presented by the Heart of Oklahoma chapter in one of their stock chats. This was presented about 2 or maybe even 3 years ago, and the trade desk, you can see what it does up in the corner up there. I've captured the thumbnail for you to read. And recently, in the last couple of years, the trade desk has begun to mimic one of our up, straight, and parallel ideas. This might be turning into a classic growth company, especially when we realize that that lack of earnings in 2016 probably had something to do with taxes. But we might want to continue looking at the trade desk, asking ourselves whether these trends, which are at extremely high numbers right now, might not moderate just a little bit and turn this company into one of our classic growth companies. Again, there's that nice, consistent sales history going on. And remember, that's a number that you can't really do much in engineering on. Sales are sales, and no matter which data source you use, you'll find that they are basically the same number. One more slide with one more visual analysis, and this is Twilio. No earnings yet, but again, look what these ladies were looking at when they put this into their stock picks for the 2020 conference. They were looking at a reasonable history of strong, consistent sales growth, and most of us know that earnings follow sales. At some point, we could expect this small company, actually, this is a medium-sized company now, at some point we can expect it to become profitable, and then once it does become profitable, we would hope that the sales would continue with nice consistency, and the earnings would then begin to follow that same pattern. One more slide, Mark. This is where we normally are in our Stock Pickers Contest, and we're going to move into other topics at this point. But again, I want to give a big thank you to Mark Robertson for helping us out for 16 years and for being gracious enough to help us out in our 17th year of the pandemic and still join us for our virtual Stock Pickers Contest. Mark, thank you so much. I hope you know how much you're appreciated by the Mid-Michiganders.
Well, thanks, Ken. I mean, I'm blushing. Greatly appreciate it, and you're most welcome. It has been a good 17 years, and we have had some fun. I put thank you on this slide just so I wouldn't forget to thank you guys also. A lot of support from the area, a lot of support nationwide, and the people that we saw show up for this. That slide, by the way, is a presentation I gave to the American Association out in Boston last Father's Day, and that was one of the few trips made in the second half of last year before all this stuff hit. And it's also an opportunity for me to actually be pictured in a slide Normally it's Ken Kavula, Mark Robertson, not pictured when it's published in the newspaper. So I wanted to take this opportunity to be pictured.
Well, that's only because I'm so much more photogenic, Mark.
There you go. And I don't look like I'm under a lot of stress in that photograph. So many of you in the mid-Michigan audience can relate to that also. We have had a lot of fun over the years. In fact, when I first became involved back in the 1990s, one of the first articles I wrote for Better Investing was about an event I had attended at a Farm Bureau gathering in DeKalb, Illinois. And I came back from that and I wrote a story for Better Investing about it being very comparable to a barn raising. And I really think of our foray into the challenge of investing as kind of a barn raising episode. And investment clubs are just so awesome when it comes down to that. And, what I attempt to do, what we attempt to do at Manifest Investing is to deliver the lessons of the modern investment club movement and to make that barn raising as easy as possible. So that's really what we're about. A lot of good fun. Well, I got to come back to the slide, first of all, because I thought you guys all deserved an actual real metal cup for your achievements. Ken gave you a piece of clip art. I think you need a nice, shiny trophy. So that's there on the right. And this is actually pretty awesome results. And Ken has already said that, but they really are awesome. And it's not just because I finished above the benchmark, as Ken had to say. What I am deeply troubled by, though, and deeply troubled, is the very last night I checked my standing before I went to bed. And somehow about 4 o'clock in the morning, Ken got some more points. And the officials have been notified. And they'll be going over the numbers, but you hate to see those things happening at 4 in the morning where it cost me a position in the ranking. I'm kidding. This is the real message. We got the wow lady back out because I want to put this in perspective. I deal with this stuff every day, and it merits a wow. And what do I mean by that? You could go to Morningstar and look and see that they have roughly 6,500, almost 6,600 equity funds listed. And the average return on a fund last year was 14.7%. There were only 515 funds that had a performance greater than 41%. So you're in the top. Every single one of these is in the top, 8% of all funds. And the winners, the cool kids, they beat 99.5% of all stock mutual funds. And there's some real turbocharged stuff at the top of that list. So I thought it'd be kind of fun to give them a standing ovation and put that all in perspective. You're not going to see that happen very often. And it's worthy of some decent celebration. Any comments or questions about that, sir?
Well, I love your GIF here, Mark. I'm going to try to find more of those and put those into my presentations. I love the movement here.
I don't usually do animation, but I decided to make an exception. What I thought I might do just for a minute is just take a couple moments and characterize, what the last year has been like. And it's been interesting. And that's a very sugar-coated word for, what has gone on in the last year. I am blessed to be sheltered at home with my best friend, who I've been married to for almost 40 years, and we still like each other a lot, and that's all really good. But even going back to December 2018, the fourth quarter of 2018, things got fairly turbulent, and then in March, this thing that we see right here hit, and the stock market actually got dinged pretty good. In fact, looking at this slide, the type of carnage and damage that you see there this year actually looks worse to me than this. Now, this was more drawn out, and we'll be talking more about that at Manifest in coming up weeks. But, we have bounced back to where we're above it pretty quickly. But one of the neat things we've seen in the community with personal portfolios, club portfolios, even the club results here, we run a model portfolio at Manifest Investing known as Tin Cup, where we hypothetically put in the maximum amount into a 401k, and we've been doing that since 1995. So putting that maximum amount per month in that time frame, that's basically what you see being tracked here by the blue dots. we publish these decisions every month at Manifest Investing. You can actually watch the portfolio. There's a public link at the bottom if you want to follow along. That balance as of yesterday was almost 3.2 million. We finally went above the 3 million mark, but I want everybody here to notice that between this point and this point, that's almost a double within a few months. That's pretty choppy waters, one way to put it. But that's what we've been through, and fortunately, those of us who have attempted to stick with excellent companies that we bought when they were on sale have experienced some of that, and that's a really good thing. All right, one other thing, and we talked about this 4 years ago at the Stock Pickers Breakfast. Some of you will remember that. When the election rolls around and it includes the selection of a president, it does send people into some kind of a mode. And I can't tell you how many calls I fielded in October and early November 4 years ago, and then a few this year also, where they talk about hiding, running for the hills, getting out of the market, waiting it out, all that kind of stuff. And I think this slide is a very valuable contributor to battling that type of psychology and investor behavior. I wouldn't even call it investor behavior. I'd almost call it trading behavior. And what this is from First Trust. Brian Westbury is the economist over there. You can actually read all about it at the link at the bottom if you want to go do a little bit more research. But what this is basically the answer to is the what if. What if I was so concerned about who occupied the Oval Office that I'm only going to invest if it's a Republican or if it's a Democrat? And that's what we see down here. And I really hope everybody gathered here this afternoon likes this a whole lot better up here. And that's Ken's point of invest regularly, and point two, stay invested. Find excellent companies and hang on to them for as long as it makes sense to do so, because I am absolutely certain that everybody here likes it up there a whole lot better than down below. So you could substitute just about any of the reasons you hear on the nightly news for those red and blue lines. Ken and I talk about this all the time. The 24/7, 365 news cycle, they're giving you all kinds of reasons that justify an attempt to think about those red and blue lines. And it really gives me a headache some days. And the antidote to those headaches is a couple Excedrin, but also finding some really good companies to be a stakeholder in. Ken, did you have anything you wanted to add to that?
No, Mark, let's continue. This is good stuff.
All right. So one of the things I thought I would share is a slide that we chose for our recent bull session. We've been doing bull sessions, kind of impromptu webcasts at 2:00 on Tuesdays at Manifest, and you're certainly welcome to join us. But we've seen a rather dynamic and robust uptick in the market in the last several days, and just wanted to take a look at some of the things that are going on. For a long time, we have watched an economic recession unfolding with the pandemic. And the way we measure that is taking a look at the average, or in this case, median profitability measured by the percent net margin of the 1,400 companies in the value line arithmetic average. So we're looking at about the average of about 1,400 companies that you see here and that long-term trend. And for the last several months, we have actually seen the numbers, year-end numbers for 2019, and then the numbers for 2020. In fact, at one point, these were down somewhere closer to 5.5. And what we're actually seeing right now is fairly substantial recovery, back towards that blue trend line when these things were beginning to fall apart. And again, just to give you some idea of the intensity of what we're seeing, this number here used to be up here a few months ago. And then the pandemic hit, and it's been heading towards 10% ever since. I think it was too high 2 years ago, but now it got hammered, and now it does seem to be moderating. Companies are handling it with better efficiency, and they're finding ways to deal with the challenge that is pandemic. Now that's not true for everybody. There are some companies failing, and it's still gruesome out there. But taking it in aggregate, most major corporations are actually handling this pretty well, and some are actually thriving as a result of some of the pressures from the crisis. Now, a couple of days ago, Pfizer announced with their, I don't remember the name of their German partner, but they did announce that a vaccine is more imminent than people thought. And we spent a lot of time talking about that, but that is also bolstering expectations in the stock market because, again, it's been decked pretty hard. And that third element of things that are going on right now is Wall Street really does like the fact that we have a divided government in Washington. Again, I don't care whether you're Democrat or Republican. Going back historically, it has been a better situation when there is a check and balance in place, and neither side can actually get too out of control. And we actually have that right now. So those are some of the major explanations for some of the stuff that's going on. It's the type of thing we talk about at these sessions. We actually got into deep, cool storage and all that type of stuff for the vaccination, and it was a good discussion. And Hugh McManus helps us out a lot when it comes to that. All right,
Mark, could we stay on that slide for just a moment?
Sure.
Because one of the big theses that I've used myself and that some of my investment clubs have used is that we can count 2020 for a lot of companies, not all of them, of course, but for a lot of them as strictly an outlier. And I'm taking heart. I've watched this particular graphic over the last 5 or 6 months. And of course, I've seen the 2020 ideas, the profitability move upward again from that low of down near 5%, like you mentioned. But what I'm taking heart from is the 2021 line, which stubbornly stayed under the trend line for many months and is just now starting to touch and maybe slightly move above that trend line. To me, that says that my thesis is intact and might actually have some validity to it. And that's what I'm talking about is that by 2021 sometime, we should be back to trend in some of these companies that took a really big hit. And I'm thinking the Five Belows, the Ulta Beauties, those companies where their business completely shut down and then they had to reopen in stages, and they're only right now starting to come back to full earnings potential. And I'm seeing in 2021 the optimism that maybe we'll be back to trend again. And I really, really like that. I would expect that 2022 might begin to move, higher even faster if 2021 begins to stabilize. So all in all, this chart is giving me a real feeling of optimism going forward.
Yeah, and this is an example of some of this type of stuff we talk about at the bull sessions. Ken asked me before the session started about when Wendy, my spouse, would be going back to work at one of the automotive companies. And they pretty much have already decided that it won't be until June of next year. One of the really fascinating things, and there's a lot of things that can be looked at and probably some real robust areas of opportunity. Commercial real estate has been hammered. But one of the perplexing things that has been discovered is that the average company has discovered that productivity has actually increased materially during the pandemic. The average estimate for a company is about 4% productivity gains. And I mean, we're witnessing this in people who are working from home. And it's really a fascinating phenomenon that I don't think anybody saw coming. And many forward-thinking corporations are trying to figure out how do they capture that, and when they do return to the office, what can they do to keep that momentum? So it's just fascinating to watch some of this stuff. And again, if this comes to fruition, you are looking at the best economic conditions basically in history when it comes to profitability. All right. Okay to move on, Ken?
Absolutely, Mark.
All right, let's talk a little bit about our Groundhog contest. It's very similar, except ours runs from Groundhog Day to Groundhog Day, and we've been running it for a few less years than Ken, and we'll take a look at that. But what we have witnessed in our contest, where you can select between 5 and 20 stocks and play along, We actually are much more generous than Ken. We give $1 million Groundhog dollars. Yours is what, 100,000, Ken?
Just 100,000. We're
Just,
pikers.
okay, well we're inflated. We have inflated currency at the Groundhog. But one of the things that Ken and I have noticed over the years is there is some of that swing for the fences type mentality, but there's an awfully generous dose of picking long term. And I'm actually going to focus more on the long term aspect of these contests and not just this 1 year snapshot that Ken was talking about. Nothing wrong with the 1 year snapshot, but also you want to think about it more long term. And what I thought I would do, and some of you have seen this slide before, but man, it bears repeating. This goes back to our Groundhog Challenge back in 2009. And this would be our choice for the Groundhog, that list of consensus selections made for the Groundhog back in 2009. Again, think back to February 2nd, 2009. We were going through one of the ugliest moments that any of us had ever experienced as investors. We were still dead center in the middle of that really, really nasty market. And back in that time frame, you've heard the stories. Ken and I would call each other in the morning with our stock selection guide results and, scratch each other's head over the phone like, wow, what can we believe about any of this stuff? Look at those projected returns in the right-hand column. I mean, we're looking at upside downside ratios of 18 and 19, and it was not an easy time. A community of Groundhog participants, again, we're talking about a couple hundred, much better than average investors, selected these companies. So, you'll recognize most of the names on that list as community favorites, not a whole lot of fence swinging from top to bottom. And we basically folded our hands and prayed and hoped. Here's what these look like 10 years later. I left them pretty much in the same order just to make the point. I want you to notice that on that right-hand side, we have annualized. Those are annualized returns of many in the 20s, a couple 30s. But the average annualized return for that group of stocks, one was taken private, one was bought out. One of them didn't work out very well, but many of them did. The average annualized return did end up being 21.2%. And again, we sit and we get this warm smile because we know these were resident in many of our portfolios. I've had people who would grab me by the shirt sleeve and say, I have 8 of those in my personal portfolio or club portfolio. And that's just a really good thing to be a part of. A lot of good, clean fun. All right. Just to give you a flavor, I thought we'd go back and take a look at our 13th annual results just to kind of reinforce some of the stuff that Ken says, because these are a lot of fun and it does generate ideas. Our individual award was won by Curtis Sears of Oklahoma and the Bower City Ladies. More on them in a minute. 3-time winners, but you can see Groundhog Day, February 2nd, 2020. All right, busy slide. The message of the slide is that the Groundhogs have done better most of the time, 8 of the 13 years. Particularly well, it's been fairly solid here these last few years. Compare those 4 years to these 4 years. And that's a pretty good looking picture on the right-hand side. Here's the 2 major numbers to remember. Again, looking at tens of thousands, if not hundreds of thousands of transactions over the lifetime of this contest, the average annualized total return is 13.9 versus 8.8. I'm stunned that it's beating through February of this year, beating the Wilshire 5000 by 5 percentage points. So a lot of good fun. And again, the message that Ken and I want to transmit is it can be a source of really cool ideas to explore and learn deeper stuff about investing. Here, this will give you a taste of the individual champions over the years. I want you to experience this because you've heard some of these names. In fact, Ken was just talking about Bernie from Midland a few minutes ago. Bernie is a former Groundhog individual champion. Ann Manning out of Houston. Paul Witt, also out of Midland. The water must be pretty good in Midland. We just love Anna Gombar, 2-time champion. Hugh McManus, 2-time champion. As an individual, again, this is not a short list, people. We're talking in some of these years, 200 to 250 participants in the contest, including the clubs. A lot of good, clean fun. There is one on here that deserves special infamy. That one
Well,
right
we're
there.
still counting the results from that one, Mark.
Well, yeah, I know you
I
are.
went to,
And
I
this,
went to I went to bed the night before this contest ended, and I was the winner of that year.
you know
And then
that
you told me that I came in second by $100. So,
you know
boy,
that
oh
is,
boy.
Ken. I got to admit that's hauntingly true. And in fact, it makes me want to take back what I said a few minutes ago because that was fictional. What Ken is saying now is actually truth. He was the leader going into the last day of that contest, and a whole lot of fun. Another year that was really cool, Ann Manning from Houston was involved in a five-way battle with four ladies from Minnesota, and she actually prevailed on the very last day of the year. Also, those are our two finishes like that over the lifetime. All right, let's talk a little bit about group champions because again, we are advocates of the modern investment club movement, and I want to draw your attention to because I'm going to reinforce some of the stuff that Ken had to say. Our reigning champions right now are the Bower City Investment Club from Janesville, Wisconsin. Their ringleader is sitting right there in the middle, Susan Michelik. This is a formidable group of ladies. There's no other way to put it. And I want you to notice that they won in 2008, and they won in 2016, and they won again last year. So they are three-time champions. Normally that would be, unequaled, unprecedented, that sort of thing. But now I want you to notice here, we got the Broad Assets out of St. Louis, and Ruby Lawrence and her group of investors known as the Broad Assets are also three-time champions. And in fact, a year or so ago, I speculated it would be really cool to have a cage match halfway between Janesville, Wisconsin, and St. Louis, Missouri. Get these two clubs together and just have a free-for-all. It would be a wonderful investing event. We may have to do that sometime, Ken. Maybe we meet in Springfield, Illinois, and just have a.
You might want to throw Herb's club in there too, Mark. He's a two-time winner. That
I was
Traverse
just getting
City
to
club
that. I'm
too.
just getting to that. In fact, Herb has relatives in Janesville, so I think his daughter actually lives there. Here, Herb is also a two-time champion, and I was saving him for last because he's a perpetual threat to win this whole thing. So a lot of good fun. Herb will talk to you about arranging that cage match halfway between the two. But what I really want to spend a little bit of time on is just reinforcing this. First of all, it is about the people. There's Ken's picture from the Wall Street Journal on the upper right, but it is about the people that have been involved in this. And we do want to focus in on the long-term results. So I'm going to show a busy slide, but please forgive me. It's worth it. What we're looking at here is not just 1 year. This is now 13 years of results. You can focus in on this column and see the number of years that are involved for these participants. You can see anywhere from 3. We require 3 in order to qualify for the all-time list. And again, I want to draw your attention to number 1, that group of ladies. I think they have one guy in the investment club, so it's a mixed club, but it's mostly ladies. They are basically knocking it out of the park. 27% return over those 8 years, beating the market by 14 percentage points. So a lot of good, clean fun. And here's Susan and her colleagues out of Bower City, also in the top 10 on the all-time list. So these are not just flashes in the pan. And relatively consistent performance year in and year out. I want you to notice that, some have asked, at your roundtables, are all those people just showing up there because they're just your buddies? Yeah, we're all deep friends. A lot of love between all of us all, but we also have the numbers. Notice that Hugh McManus is he's got an unusual style sometimes. What you should know, though, about Hugh and his personal investing is he does have a very nice set of core investments, but he does do that non-traditional, non-core type stuff that Ken was talking about. And he is a 2-time winner, and he is in 3rd place. See that Paul Witt is hanging up at the top of that list. Anna's still hanging up at the top. But it is kind of interesting to watch some of the interplay between those. Kim is on the list here. Ken is on the list. So again, and some of these people that you hear us mention, again, they've been doing this for nearly 10 years or more, and just at some point it's not accidental, and that's kind of my message. Many academics would say that it's monkeys throwing darts or writing classic novels on a typewriter with a room full of monkeys, and they're not right about this. What we do, and we're going to talk a little bit more about this, what we do does work. It doesn't always work. There are no guarantees, but it is a lot of fun, and it can be most effective. And I think you see a bunch of names on there. Kurt Kowitz gets honorable mention here. He makes the list. You need to know, and Ken can actually vouch for this, he makes his selections every year in about 60 seconds. And Ken can back me up on that. He just runs a quick manifest screen and turns in the top 5 results. And notice that that 16.1% over nearly 10 years is not too bad, not too shabby at all. Now, what I want to point out is that here's the 2020 in progress. Now, these are not completely updated for dividends. We'll be taking care of that. Might even be missing a stock split, so it's preliminary. We make sure we catch all that when we do. But I want you to notice some of these names that are still at the top of the list. Broad Assets is up there. Oh, by the way, the other cage match crowd is here. Couple clubs that Ken's involved with up near the top. A lot of clubs up here towards the top of the list, but one of Herb's clubs is just off the list, and in fact, Herb is actually on the list instead of his club this year. That's cool. This group of ladies down, I believe it's ladies down in Indianapolis, they've been around for the last couple of years, and they also appear to be quite formidable, as do these ladies from New York. So again, I look to this as maybe this isn't such a coincidence. Hugh's on the list, Ken's on the list for this year, and a whole lot of good stuff going on. Richard Allen has been coming up with great ideas. Bharath Ariana Yagapuram has been with us a couple of years, and he has been at the top of the list now for 2 or 3 years running, so he's going to be joining the very top of that leaderboard as soon as he qualifies for it. Marie Frank is known for watching very carefully the small company stuff that we do, and she contributes every year to our hunt for the best small companies. I don't think it's an accident that her name is up there, and she'll be ranked very high on this list once she qualifies. So some pretty good fun top to bottom. Anything jump off the list for you, Ken?
I like to see all the clubs moving to the contest, Mark, and how well the clubs are doing. It's amazing to me that you can take a diverse group of people, ask them to put in some kind of an entry, and I know that the clubs in our contest don't spend an inordinate amount of time choosing their entry. Maybe 15 minutes, maybe 20 minutes, and yet time after time after time, it's some of the same people rising to the top, the cream rising right through everything else to sit on the top. It's amazing, and that's why I start to look at these portfolios of these people that I recognize as always turning in great stock picks.
Yeah, it's obviously a place to turn to for ideas. I noticed Charlene's in the back room right now. Charlene Hansen is on the list, and I'm pretty sure she's pretty close to qualifying for the all-time leaderboard too. Good fun. So anyhow, one of the interesting things is, as Ken said, you can click on any one of those names and actually see what the investments are at Manifest. We don't really have time for that today, but maybe we'll play around with that at a future bull session or something. Much like Ken was talking about a few minutes ago, you want to, anytime I see a club like the Broad Assets ending up where they are so consistently, I try to dig in as an engineer and figure out what are they doing and how might I learn, how might I benefit from that. One of the things that we discovered that club seemed to be doing is the same thing Ken talked about with Street Smarts a few minutes ago. And they are looking for opportunities to invest in promising companies early in their life cycle as a company. And there's an entire article dedicated to this at Manifest. The link is down at the bottom. You do not have to be a subscriber. It's a public link. If you have trouble getting to it, send me an email. But all they're trying to do is identify, just like Ken showed you, here's what it looks like on a guide, a company with a promising sales trajectory and expectation, and then this notion of fairly significant upticks in earnings. And this particular company was Lannett. Ticker was LCI. I'm pretty sure it's been acquired by somebody else. But this was a core holding in their Groundhog entry back during the first couple of years. And then I noticed that they didn't re-up and keep that company in there. And sure enough, the reason was this happened, and they were moving on to the next company that looked like this on among their selections. So it can be an interesting opportunity to learn. We think of this as, well, you'll hear us refer to this as launchpad type investing. Ruby Lawrence and her group of ladies down in St. Louis really seem to have a knack for this, as do the ladies in Saginaw, the Street Smarts. So they're worth paying attention to. All right, so I thought I would just kind of close things up with my own version of or interpretation of those rules that Ken started the whole session. You know, no matter what's going on, we like that black line a whole lot better than the red and blue lines we were talking about a few minutes ago. The whole mission is discover excellent companies and own them. Assume ownership when the price is right, when they're on sale. If you want a high return forecast from your SSG Section 5, you want a high par. We're going to talk about projected return on value tomorrow as a complement for that. And last but not least, you want to maintain the stewardship of your position for as long as it makes sense to do so. Notice I don't say hold. I don't say any of that other stuff. I'm talking about being a steward of the thing that you own, and keep it for as long as it makes sense to do so. Give it as much lease as is required and good common sense. Just want to take a moment to reinforce rule number 1, invest regularly. This notion of being disciplined or patient. The gentleman on the upper left is Tom O'Hara. He was chairman of the National Association of Investors for over 50 years. How many people can say that? How many people do you know that have been chairman of anything for 50 years? Well, that's what he did. So back in February 1948, he began investing $20 a month. These are snapshots, excerpts from the spreadsheet, which calculated the club's return. You can see his $20 investments here, and the bigger spreadsheet on the right-hand side. I calculated this upside down and sideways until I was absolutely certain about what I was seeing, because it's almost unbelievable. I mean, I'm sitting there in the Mutual Club of Detroit after recently joining the Better Investing magazine staff back in the late 1990s. And by the way, there were 3 people in the club that had over $1 million in the Mutual Investment Club of Detroit. So I'm like, my head's almost numb even just thinking about it. Tom had invested this $20 every single month since February 1948. In fact, over here, you can almost make out this 1980. That's taking out $2,000, but he didn't take out 1980. He took out, give him the full $2,000, then he handed back a $20 bill, well, $20 check. He always insisted on putting that $20 in every single month. And the really phenomenal number for me, $13,000 invested from 1948 through 2003. He had withdrawn almost $500,000, and his balance was still $900,000. Those numbers are staggering to me. Now it's many years, but boy, such a powerful message for a young person. Now, for a little more context, and again, that 13.2% return, there's a lot of clubs and individuals out there achieving numbers like that, and it's not guaranteed. Not everybody does it, but there's also many that achieve more or higher rates of return, and the numbers just explode at that point. Herb Lemkool pointed out a little while ago that $20 in 1948 was a car payment, equivalent to a car payment today. So you want to keep that in context also. But I think that's just such a powerful story. Again, up straight and parallel, it's not a myth. It works. You want to find companies like this and hold a suitable number of these in your portfolio to prudently diversify. Prudently diversify includes enough core and enough non-core once you're an experienced investor. One of the other things we've been doing at the bull sessions is talking about the books, as I say at the top there, that inform, influence, or inspire us. And it's been a lot of fun so far. We'll keep doing it until we run out of books. There's some really good ones there on the list, and can have a lot of fun. This week I was reminded about this one. I hadn't thought about this one in a long time. One Up on Wall Street. And by the way, he talks about investment clubs and the miracle of St. Agnes. You want to become familiar with that. And he talks about how, here this person who's been, ripping through the success of the investing world as a professional, talking about a group of grade school students and basically sending the message, anybody can really do this. If you just learn what you're doing and pay attention to it and practice good stewardship. But he also includes a bunch on those non-traditional or general market securities that Ken was talking about a few minutes ago. And I want to go back and remind myself what Peter Lynch had to say about cyclicals, turnaround, early stage. Maybe someday when I grow up, I can be as good as the street smarts ladies or the broad assets of St. Louis. So again, that type of thing. Then what I thought I would do is just close with this thought about, what's one of those main things which makes us different. And what we're looking at here is actually an older version of that slide. Remember I told you that the bar on the right was even higher, and 2019 and 2020 was up above the blue line. And so this is about 18 months old now. You can see that has changed as you go back through the slides. But what about that simple question? Maybe not so simple. It certainly is challenging for average investors. There aren't any here today. If you're an average investor, you wouldn't be here. What if we were able to concentrate our shopping and stewardship amongst the highest quality companies? What does that look like? And that's what I want to kind of leave you with. And I want to take this away, scratch your head as much as you need to. This is the 1,400 companies in the Value Line survey at the top of the chart. And you can see the turbulence, you can see the general trends and all of that. And what I want you to do is contrast that with those at the bottom. These are the Manifest Investing 40, which are the 40 most widely followed companies by subscribers. And you're going to know all 40 names. They are community favorites. And I want you to notice that they're much less volatile. By the way, profitability at these companies actually went up in 2009 instead of this. So you can try to convince me that quality doesn't matter. Be prepared for a pretty good fight, because I believe it matters. I believe it's shown right here. Notice how well these companies are sticking to the trend. They're less vulnerable to the vagaries of the economy. And then most importantly, I want you to notice the scale change. Notice that this goes from 5 to 11. This one goes from 5 to 23. Think really hard about what you're looking at here. We're talking about we only want to shop amongst companies like these. And we want to buy these when they're on sale. And we want to benefit from times when the economy challenges and companies all around, but ours behave better. They drop less, and they actually increase better and more steadily than other companies out there. And it really is kind of a secret of what we do. Ken, did you have anything else you wanted to expand upon or add to that?
Yeah. Mark, where would a person go on the Manifest site to find a list of the Manifest 40?
Yeah, the Manifest 40, there's actually a publicly displayed dashboard right on the homepage. And then there is a link. I can demonstrate that as we get done here. And there's also a direct link to the list of the 40 companies under the research tab. Okay. All right, so let's just close with some housekeeping. You're invited. Ken mentioned it earlier. The next roundtable for November is actually going to occur in December, thanks to Thanksgiving. Due to the Thanksgiving holiday, we're actually going to hold that on the first Tuesday in December, December 1st. And we have a lot of fun with that. You can go to YouTube, just search on Manifest Investing, and you'll find all of the bull sessions, all of the roundtables, every one of these sessions, all of the May sessions from the COVID conference #1 are there. And if you'd like to be reminded anytime we post new content, just please subscribe, and YouTube will let you know. I did want to make one closing point on how much fun we have at the roundtable. This was a good one. Ken says that I chose a good pumpkin for him. And Cy appreciated his opportunity to rise above and preach a little bit. And what's Halloween without a shamrock? Hugh McManus. But here's the other reason. You know, we talk about, and again, knocking on wood, we hope this stuff continues to work. It has for 40 years. This is just a group of friends coming together, sharing ideas, and we keep track. And here's the results as of the October session. Basically a 17.4% annualized rate of return, beating the market by almost 6 points. That's what's graphed right down here. And then as of yesterday, when the stock market shot up, that annualized rate of return actually went up all the way. In fact, that's this morning, 17.8%. So it's kind of fun to watch these guys do what they do. Kim, Herb, Ken, usually Ken. A lot of good, clean fun. So with that, we'll just remind that we'll be back here tomorrow. It's 1 o'clock start time for the first session, right, Ken?
I think that's right, Mark.
Yep. And we'll do these 2 sessions tomorrow afternoon and close out on Friday with the other 2. So with that, Ken, if you want to make any closing remarks, and we can certainly stick around for a few comments.
I just want to repeat Mark's email. We've had a number of questions about where can you get the slides. Mark's email is markr, M-A-R-K-R, at manifestinvesting.com. So you send him an email, he'll be glad to send you copies of the slides. If you have questions, Mark will be glad to try to answer questions. Questions for me about the contest, use the email that you're seeing on the screen. Only the first letter, make the first letter a K rather than an N. When you use the N, you're going to Natalie, and she keeps our records and our guest list. Send it to K Kavula1 if you have a question about the contest, and I'll be glad to talk with you about it. I want to send out a message to all the Mid-Michiganders that are with us this afternoon. You will be receiving an email tomorrow sometime, and it will tell you how to hook into the website for the 2021 contest. That's not a public hook-in. It's only for the entries to the contest, but it will allow you to follow how the contest is doing month by month by month. And I'll send you a complete email tomorrow to all of your club contacts in the contest about how to make that happen. Thanks so much, folks, for coming with us today. Thanks for allowing us to have a Stock Pickers breakfast without having any breakfast and without it having be before noon. So with all that, we thank you, and we hope we see some of you tomorrow when we talk about the greatest small companies. Thanks a lot, Mark.
You're most welcome. Thank you.